Hey guys, what's going on? It's Nathan at Wholesale Capital. One of the biggest things that we're dealing with on a day-to-day basis right now is credit. It's one of the services that our team provides. We do not send clients out to credit repair companies when we're trying to bump their scores. We're bumping scores for various different reasons. Sometimes it is to obviously get clients to qualify, and other times it's just to get them a better rate. I am in no way, shape, or form the credit expert on my team. Ryan Meir, who's been with me for about 3-4 years now, is the one that we really rely on to analyze our clients' credit and put them in the best position financially to buy. So I wanted to give you guys a little bit of an insight as to what he does and what we can do. Hey guys, I'm here with Ryan Meir on my team, who is the one responsible for bumping all of our clients' credit. He is the credit guru. So I wanted to get some insight from him that will hopefully help you guys as potential home buyers. So first off, how often would you say we are bumping credit?
On average, anywhere between 1 to 2 times a week.
Okay, and obviously the reasons that we're bumping credit vary. So what would you say the two main reasons are that we're analyzing people's credit?
Either get their credit scores up to qualify or to get the clients a better interest rate.
And just so you guys know, bumping the credit to get a better interest rate, we can actually do that on the fly while you are in escrow. So we don't have to put the home search on hold while we're trying to do that. So as far as bumping the credit, what are you looking for? What are 3 of the most important things that are really going to have the biggest effect?
I'm looking for no late payments. Obviously, it's the most key and biggest component into having a healthy credit score is making your payments on time. With that being said, when we go over our clients' credits, we make sure that everything is there. We go over the balances, payments, and everything. One of the biggest things my clients tell me is, oh, you know what, I actually pay that card off every single month, but their balance is still reflecting. So
for example, they'll have a credit card that the limit's $500 and they owe $300, but yet they pay it off every single month and it's reflecting, but it reflects a $300 balance on our credit. So how do they avoid that?
They pay one day before or multiple days before the end of the billing cycle period.
How do they find when the end of the billing cycle?
They can log in, or they can look on their billing statement and it'll show billing date period cycle ends, April 17th or the 18th of every month.
So what you're saying is the clients can log on, because there's 2 different dates. There's the date that the billing cycle ends and there's the payment due date. 2 completely different things will have 2 completely different effects on your credit. So you need to log on to your account. If the billing cycle ends on the 17th, pay it on the 16th instead of waiting until that payment is due and then paying it off. Because what reflects on our credit is the balance the day that the billing cycle ends. As far as paying it off, things like that, what else are they looking for as far as balance to limits?
The healthy ratio is 30% under your total credit limit. So
if the limit's $1,000,
$300 balance.
Okay.
So you want to make sure to keep that under. It just shows healthy reporting.
And as far as clients that come to us and they maybe already know that their credit is not the greatest, and they've already got a game plan, whether that's from Googling something or a family member told them what to do, what are some things that they don't want to do?
Do not close accounts. I cannot emphasize that enough. Closing accounts hurts your scores so much. Due to the fact that if you've had a card since 2015, you've had a card since 2000, you've had a very high limit and a very low balance, and you're closing 15 years of healthy reporting to the bureaus. So you want to
keep the accounts open, just don't use them maybe?
Yeah, use them, keep a very small balance on them, use them maybe every other month or something just to show, date of last activity on there. You just want to keep it current, keep it low, and keep them open.
So someone calls in, their credit's not good. You go over the credit with them, make sure, this is theirs. Number 1, how long does it usually take you? And what are the questions that you ask a client before you get off the phone to go work on the game plan?
Hour, 2 hours tops, just really depending on where we're going to have to go with it as far as the route and the game plan. What I also ask too is, aside from the fact that the money they have in their savings, is if I were to ask you right this second, how much would you be willing out of your savings to put towards either paying items down, paying them off, whatever is going to help them the best, and that just gives me a better all-around general understanding of how much money I can work with.
So a client might have $5,000. It doesn't mean obviously they want to spend it. So you're gonna go to work based on, okay, I have $5,000 to play with. We completely understand that doesn't mean you want to spend it, and figure out where the most bang for their buck is.
Exactly.
And then how long does it typically take from start to finish, the day they call in and we realize we need to bump credit, to actually bump the credit?
Well,
I know it can vary a little bit, but give me an average.
So if that exact same day that you were to call in and we were to make a game plan and decide, okay, you know what, go pay this down, this down, this down, and explain it why and everything, a typical average rapid rate score would take 7 to 10 business days, really just depending on exactly what we're doing and who's a creditor.
So something to notice there is 7 to 10 business days is, number one, it's not that long. So if it's something that we're doing while you're in escrow, we have plenty of time to do it before escrow closes. If it's something we need to do before escrow opens, then it's not like you're having to wait months or before you can get into the process of actually buying a home. So don't let that discourage you. A couple of weeks of work up front can put you in a much better position, get you into a much better loan for the life of the loan because of the interest rate and things like that.
Definitely.
So obviously there is a ton more that we can do. There's a ton more that Ryan can do. These are just some general points that we think you as the clients need to know. If you have any questions, we are located here in Corona. You can come into our office, you can call us, you can email us, you can text us. But we think that there's too many people out there that want to buy homes but have no idea where to start. Credit is one of the biggest hurdles that people have to get over. So hopefully this information helps you. You can call us and we will walk you through a detailed plan for you guys. Thank you so much.
Thanks.